Welcome back to my channel. In today's video, I want us to focus on personal finance, basically knowing your net worth. I'd like us to understand what net worth is and how you can improve your net worth in the long run. So your net worth is the assets less the liabilities. And an asset in layman's language is any resource that generates cash flow, while a liability is what you owe to other parties. So examples of assets that you may have is your regular checking account, that is whatever balance you have in that account. You may have your savings account, your retirement fund account, your SACCO contribution, your money market fund, whatever you've invested in treasury bills and treasury bonds. You may have a rental property. You may have a piece of land that you've bought somewhere. So all those are assets. While liabilities in this case can include your student loans, your personal loans. It may be from a bank, from your employer, or from a SACCO. It can also include mortgage loan, your mobile loans, an expense that you already incurred but you've not paid for. That is an outstanding bill, assuming you have maybe 2 months, 3 months pending bill. Maybe that is a rent you've not paid for 2 or 3 months. That is a liability. So when you sum your assets and less the liabilities, what you get is your net worth. And you need to track this net worth on a regular basis. The way you track your fitness routine, you need to track because this is actually part of your fitness, because this is financial fitness. So you need to track regularly so that you know where you are. If you find yourself in a negative position, it should not be a panic at all. Because, for instance, when you are starting your career, you find that your net worth will almost be negative, especially if you took a student loan like some of us. So you'll always find that at the time of you are starting off your career, you have your student loans, and yet you've not acquired any asset because you are just beginning. So having a negative net worth should not be a panic at all. It is only indicating where you are, and now that means you have to now work towards improving your net worth, and that is decreasing your liabilities and increasing your assets. So at the beginning of your career, you find that you are on a negative position. Have a clear structure how you want to move forward. What do you want to invest in? If it means you want to invest in a SACCO, I know we'll talk about SACCOs later in our channel. If you want to invest in the treasury bills, you want to have a money market, you want to have a retirement. So you now have to plan the way forward. And on your liabilities, it is good to have a list of all your liabilities, and then you now track which one can you reduce going forward, step by step, so that at the end of the year or at the end of a certain period, you may celebrate every milestone. For instance, at the middle of your career, you find that you've already accumulated some assets, and you may also have a huge debt. Maybe you've already taken a mortgage, but of course a mortgage is for a good cause. Though on mortgages, I recommend that you take a mortgage that is for a shorter period, so that you don't end up paying maybe for 20-30 years, whereby the interest will be very, very high, and that means that it will burden you for a longer time. Yeah, so at the middle of your career, you'll find that your assets and liabilities are almost apart, because you are now busy acquiring assets here and there, and some of them you may acquire on loan. That means you have a liability to pay. So it is good to check your status so that you understand, am I in the right position or I'm heading to the wrong? It may also mean that you have a good income, but you have bad spending habits or bad borrowing habits, which will now put you in a very awkward position, because you'll always be struggling to make ends meet. So it's good to regularly know your net worth. It may also mean that in the past, maybe at the beginning of your career, you've made some bad financial mistakes, because maybe you didn't have enough financial literacy, that is knowledge. You didn't know where to put what, and just to make sure that you are growing financially. So you now have to change your ways so that you make it better. And in one of our last videos, I shared on the 50-30-20 rule, which is a basic tool which guides you on how to distribute your income. That is at the beginning of your career, because maybe you're still struggling to add 1, 2 there. So that tool, the 50-30-20 rule, actually assists a lot in now getting a better net worth or improving your net worth. So in conclusion, always try to spend less than you earn, if possible. Try incorporating the 50-30-20 rule, and that will definitely boost your savings. Also, ensure that your savings is in an account that grows. That is where you are earning interest, so that your savings are not eaten up by inflation. It can be a money market, it can be a treasury bill, a bond. Just ensure that your savings is somewhere that is growing. It's not just, I deposited 10,000, so I'll still withdraw that 10,000. That won't make sense, that your money is not growing. And finally, ensure that you regularly check your net worth. It can be quarterly, semi-annually, or even annually. This will give you a clear indication of where you are, and you now know whether you are growing or you are sinking. Thank you so much for watching today's video. Please subscribe if you've not, like our video, and comment your thoughts. Stay tuned for more content. Bye-bye.